Good morning, ladies and gentlemen. My name is Greg Miglowski, and today's date is August 22nd, 2014. It's all about Jackson Hole. I want to speak a little bit about trading the euro versus the U.S. dollar as well. We have Jackson Hole today with Janet Yellen and also Mario Draghi speaking at 10 a.m. and 2:30 p.m. respectively. Yellen opens up the conference with the morning breakfast show. And she's expected to talk about employment. And what we've seen from the FOMC statement this week is a change in tone from the Fed about the employment situation. So it is now time for the chairwoman to come out and get behind the idea that the employment situation is not worse. It's getting better. The average non-farm payroll gain for the year per month is about 240,000. From my calculation, and that is much better than the sub 200 levels that occurred over the last since really 2011. That's not bad. That's not bad. And so there is a movement to the upside here and a momentum that it's time that the Fed chairwoman acknowledges with the unemployment rate staying at 6.2%. So that's my take on it. Tell the truth. Let's see what comes out of it. Now, trading the market is a different thing and than the fundamentals. And so I want to go through some of the key technical levels here that are important for you as a trader. First off, the euro versus US dollar. What do we do this week? We fell below this trend line right here. This trend line connected recent lows. It also was the low from November of 2013. So those two things came together at this point right here, which came in around the 132.96 level, and the market fell off. Now we did find support at the 38.2% retracement at 132.47 in trading yesterday, and we saw the rebound overnight and in yesterday's trade right back up to the underside of that trend line, right back up to that 132.96 area. I think the high price for the day came in around 132.90. So the 133 level, or the above 133 level that I used in my video last night that some of you might have seen, held resistance, and the market has since come off, currently trading at 132.71, fairly comfortably below that 133 level, but also fairly comfortably above the 132.47 level, which is the 38.2% retracement level. So that is there's a closer look at it, of course. So that is what we're going to be dealing with today through Yellen's speech. Is, do we go above the 133 level because she's not as positive? I don't even want to say hawkish, okay? Not as positive about the employment situation. In which case, you'll see the price move above the 133 level. I'm out at that point. I would look for further upside potential. This is the do or die time for me. If she comes out a little bit more positive about the employment situation, I expect the price to move below the 132.47, and that ultimately should lead to a move down toward the low price going back to what is this in September of 2013. That level comes in at 131.04. And then ultimately down toward even the 50% retracement of the move up from the 2012 low, this low right here, to the high right here. The 50% retracement comes in at the 130.16 level. I know it's I often don't go out that far as my analysis goes, and there's going to be other levels along the way. But if you think about it, a 2-year trading range with the and we're still just hanging around the 38.2% retracement of that 2-year trading range. The euro is still stronger on a relative basis over that 2-year period by by that, well, that the difference between the 38.2 and the 50% retracement level. When it starts to move below the 50% retracement level, that says to me that the bias is swinging more toward the dollar side as opposed to the euro side, at least over the 2-year time period that we have right here. And with EU unemployment at 11.5%, U.S. employment at 6.2%, U.S. adding jobs over the last 4 years at a pace of at least 180 or 180,000 per month over that time period, EU showing very little in the way of job growth. The currency is supposed to lead the way. The currency is supposed to provide an extra stimulus for the weaker country and take away a little bit of the froth from the stronger country. A move toward the 130 level, therefore, to me, is not out of the question. Now, it doesn't matter what I think. What matters is the price action. And so today, as long as the price remains below that 133 level, look for further, and we break through the 47 level on the downside, look for further momentum to the downside for this currency pair, and we'll follow it along as it goes along. If you want to see more commentary while the event occurs and while the market moves, you can always go to my website at gregmikefx.com. I'll put that up here, right here. There you go. And also, if you like these videos and want to subscribe to my YouTube, just click this subscribe button. My name is Greg Michalowski from Greg Mike FX. Good luck with your trading today.